I am recording. So, welcome to Wednesday webinar. It is 7:10 this Wednesday. It is at the end of January of 2019. This year has started off pretty good. Pretty good for me. Pretty good for some of you, most of you that has sent me profits, that has said that you made profits early this year, even in a shaky market right now. That is good. I'm proud of y'all. Pat yourself on the back. That is really good because that means that we are still finding ways to profit in the market when it's still kind of shaky. There has been a continuous kind of uptrend going on with the small cap market, and it's been going on for a while now, basically the whole month. And it looks like it's going to come to a slight end, but I've been enjoying this rally. I hope you guys have been enjoying the rally. If you haven't, then you missing out because you're not taking advantage of opportunities. We have alerts going out. We have alerts from everybody. Everybody's participating in alerting stocks, which I like. I want more. I want more. I'm going to continue to give out more alerts and more analysis on these alerts so that you can take advantage of the opportunity. That way we all make money. That is the reason for this group. And I want to remind everybody of that this year. Going back to the basics, going back to simplicity, that's the reason for this group. This is the stock room. So we're going to continue to alert each other. We're going to continue to share our profits. We're going to continue to kind of build that family-based camaraderie type environment where everybody's, sharing opportunity. Nobody's beating down. Nobody's trading ideas. No one is, negative. Even if you do take losses, you are being transparent. You're revealing your losses. I reveal my losses to you guys, when I lose or when I am losing. So I expect the same from you guys too. That should be the expectation we all hold ourselves accountable to is one, transparency. That's key. And two, just staying motivated and helping each other and alerting each other. And that's what the group is about. That's what the whole purpose of the chat room is, to help each other out. So next thing, overall market. Before I get into my recaps, like I said, I'm going to do my recap on NOG. All right. That's probably going to be the title of this video. And I'm going to do a small recap on that. But let's go ahead and jump into the overall markets. So let's start with the Dow first, which that is the biggest index. Let's start with that. I want to go ahead and go to the 1 year chart. And let me go back just a tad bit. And bam. So let's go to the 5-year weekly chart. The 5-year weekly chart, this is basically giving us a time frame within 5 years. Every candlestick you see is representing 1 week. Right now, like I said, we've been having a rally for 1, 2, 3, 4 weeks, for a whole month. Now we're seeing some red here, which is perfectly normal, nothing to panic about, but the market is trading back within range. What do you mean by that? Let me show you. So I'm going to create a channel right here. I'm going to kind of draw a support and a resistance where you can see the range of where it was trading at before it had that big fall. This was the range, ladies and gentlemen. This was the range right here where it was trading. It was trading in between 233 to, let me move this over here, 233 and 267. So we're back in that range, which is great. I don't know how long we're going to be in this range, but I have taken advantage of this month. I hope you have. I have too. So my analysis on this, the Dow, those are the industrial companies, basic material, your big industrial manufacturing companies doing pretty well right now. Today, it was an okay day. Even though it was red, it was okay. Why I say that? Because if you take a closer look right here, you notice a doji, or you can say almost a hammer, but more of a doji because it's making a cross. So it's an indecisive day. It doesn't know whether it wants to continue in an uptrend or start to head down. But what we do know is that eventually it's either going to go either way. It's going to go up or down. We're going to stay tuned on that. Now, let's go to I want to go to the Nasdaq. And the reason why is because the tech industry has been getting beat up for so long, and I want to go ahead and clear this up. So, tech companies have been getting beat up. It all started out with Facebook and that whole data sharing scandal. That whole scandal kind of threw all the tech companies off because Facebook is one of the largest um, tech companies. And then you got Apple. Apple took some beating too. But the thing is, tech is starting to come back within trading range as well. I want to see tech do good. When tech is doing good, people are happy because tech. The reason why I say that is because people pay more attention to tech companies. So when most of the consumers think, or most of the retail traders look at these companies like Apple, Google, Netflix, and they hear bad news about them, they automatically think the economy is doing bad, which causes people not to trade, the stock market not to be as volatile, or a lot of sell off. We want tech companies to do well. I do, because that kind of trickles down all to the other. It just spreads across the board to the Dow, to the S&P 500, to the small cap markets. I love it. So I want to see more good from the Nasdaq. I want to see this Nasdaq continue to ride up. I think that's going to go in our favor in the long run of this quarter. Now, this year I will be separating trading performance in quarters. I won't be going based off months. The reason why, I don't want to have too many monthly recaps on monetary performance. I don't want to focus in on that. I want to focus on the long term. So for this quarter, at the end of March will be the end of the first quarter. I want to see the tech companies stay within this range right here, right there. If if the tech companies can continue to perform well, especially in the first quarter, when those reports come out in like April, man, that's going to really set it off for the summer, because the summer is very, 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 very busy. So I want to see that. That's kind of like my ongoing forecast right there. All right, I'm adding a little more skill to my analysis, is the financial forecasting. That's my forecast. I think it can stay within the range. That's why I'm telling y'all about it. This is the range I wanted to stay in. If it can stay in this range, I can see these companies do well. I can see that being a great thing for the overall economy. Okay, so let's go ahead and go to the S&P 500. Kind of the same thing here. Let me go back. Let me go back to the 4-year weekly chart. This is actually getting back into the trend. Okay, so I wanted to reach up here, but we do have some resistance at the support. So we got to watch out for the S&P 500. S&P 500, of course, is the mother lode. Just like the Dow, this is the 500 Fortune companies that keep our economy together. When S&P 500 is doing bad, that means most of the 500 Fortune companies are doing bad. So that's not good either, because people like to go off this too. But like I said, some of those tech companies in the Nasdaq are in the S&P 500. So all these companies are calculated into one price. We want to see this get back into trend. If this gets back into trend, matter of fact, let me set an alert. I'm going to set an alert right here, because if this gets back in trend, that is big for us. I'm telling you, it's like my 3-4 years of trading, like I've been saying this. If this gets back in trend, like, expect stocks to have those 180%, 100%, 200% days. I'm talking about OTC stocks, over the counter stocks, micro cap, even small cap stocks. Man, they start rocking. And that's all from these big overall indexes performing well. These companies have to perform well. So I'm paying attention more to they earning reports that are coming out. And we want to catch those earning seasons. Now, fourth quarter, not so good. Fourth quarter wasn't really as bad as people may seem. It was just all the bad news that was coming out. So remember, pay attention to news. If you do that, you will stay in the loop of business. You will understand the economy more clearly. You won't be like, why is this happening? Because you'll understand what's going on. These financial reports weren't bad as people made them seem. But with the news with politics, you see politics plays a big role in how the market performs because people are so media trained into looking at the media, going to the media for facts instead of researching it themselves. I don't know why people are like that. We've been trained like that. So if this gets back into trend, these overall companies, these big companies start performing well, and there's a limited amount of politic news coming out. If they even have mediocre reports, it's gonna be great because it's gonna be better than the fourth quarter results that came out for 2018. So I'm hoping that this goes well, and I'll just wait to see what happens. Now, let's get to the bread and butter. Let's get to our index, small cap market. I gave an update earlier today, but as y'all see, we did have a pullback today for the week, for the day. If I go to the daily chart, you'll see we've had a pullback. And I don't know how this is going to last. In the morning, it was going green, and then it fell back. It couldn't hold. The thing that I'm not too worried about, the reason why I'm not too worried is because the other overall markets did really well. And when I say really well, they were holding off on that pullback. They ended up being green on the day. So I'm thinking the IWM is going to follow suit tomorrow. Do I know that 100%? No, but I'm banking on that. And if I'm banking on that, that means we have another rally, and this can stay within the trading range that I wanted to stay in. I'm banking on this. If I'm banking on this, best believe I'm still watching these stocks. I'm not scratching too many things off my watch list unless they break their uptrend. I'm not scratching them off. I'm going to watch them because I want to dip buy the stocks that are falling down. I want to continue to dip buy, continue to catch strong supports in high volume, high volatility, and a couple of other indicators like the SMA 20, the simple moving average. I want stocks to be trading above their simple moving average. This is going to give us an edge in the market. You talk about edge, you got to have edge when it comes to profiting. And this is something that we want to focus on going forward is when you do have edge, when all things are there, bet big. When everything is not there, bet small, because if it goes haywire and it goes left like Jeff, then you can pull out and not take a big loss. This is going to minimize the losses this year for 2019 for the first quarter starting off. Now, if all the variables are there, bet big, go strong, get those big gains, and that's what it's gonna take. Now, if this is your first year, I'm not talking to you right now. You need to focus on learning. If you haven't been profitable and this is just your second year, you need to focus on learning. You need to focus on beta testing, using this on-demand tool over here, and going back in history and trading these setups that you see, trading these patterns that you see. You need to focus on beta testing, learning, trading. All right. Even if you have $20,000 in your account, you have to beta test. You have to test your ideas and then execute them in the real market. You got to beta test though. You got to be able to measure your success. If you can't measure your success, then that is a problem within itself because you can never really get better. So with that being said, I know that how I measure myself is through Profitly. Now, this is a software community as well, but you can basically upload your trades here. You have like your own profile. You can upload your trades directly from your broker account. You can upload them. This is how you can test yourself. This is how you can see how you're doing. This is how you can see, what's going on, with your winning percentage. You can see your average gain. You can test. Now, that comes from also testing in here on demand, testing this idea that you got. You want to keep trading this pattern, or you want to keep trading stocks that are at a year support. Whatever your idea is, you got to test it out. Because if you don't test it over and over, if you don't test it at least 10 times, then you're not doing your due diligence. You can't expect profits or consistent profits if you're not doing that. I want y'all to do that, because then it's going to help you out. Is you're going to start seeing like you're going to be like, oh, I'm getting really good. It's because you practice, just like anything else. Basketball, football, baseball, school. When you study, you get a good grade on your test. B, A, whatever. When you go practice, you get better at your game. You get better at your skill, your craft. Same thing with stocks. If you don't practice, you don't put in the work, don't expect the results. And just like with any other of those things I just named, sports, school, sometimes when you practice, you don't get the result that you expect. Sometimes you can go and shoot 50,000 shots in a week, and then game day come, and I mean, you lose, or maybe, you're practicing on that football field, and, you practice throughout the week, you practice, then you lose the game, or you have a bad game. Perfectly fine. On to the next, OTTN. That's why we say it, because you have to train your mind to be like a gladiator. All right, you have to. If you don't, you'll check out real fast. Watch this year. People come in and out. Trust me, I see it all the time. People come in and out. The people that come in, look around you and see who's going to check out of their New Year's resolution or their goal. Trust me, it's going to happen. People are going to check out. They're going to say, I'm going to get into this. I'm going to do this. And they're going to check out. Happens. You can't check out. You're part of a group. I'm not going to let you check out. You can't check out. You got to keep going, because you set a goal. Everyone in a group set a goal. They set a goal for themselves, and it's my job to make sure you get there. Okay? So let's go ahead and go. I'm going to go ahead and go to the NOG recap. I'm going to give y'all a recap on this trade, so y'all can see how that played out. And let me pull this up. Traded this on the 18th. And let's see. Traded this on the 15th, sold on the 18th. Bought at 250. This is let's see. Let me go back to the daily chart. I do have to go to the daily chart so y'all can see the dip of where I bought it at. So this is where I bought it on the 15th. And this is on the 15th. This was right in the middle of power hour. So I bought at 250. Okay. Bought at 250. Sold 3 days later on the 18th. On the 18th, I sold at 279. So that trade, I know some of y'all already asked me. All right, now you do see the pattern right here. You do see the pattern, kind of like a falling wedge right here. It was a breakout. It was a pullback, like I always preach. All right. But I did get scolded by some of you. It was like, hey, like, it's not the second green day, like you say. I understand that. I completely do. The thing about that is, it's not set in stone. Let me say that anything I tell you is not set in stone, because the market can change, or my ideas can change. And I like to keep you guys updated on that. Yes, usually I wait for the second green day. Now, when I was examining the market, I understood that the market was also just coming off of a slight pullback right here. This is the 15th. Y'all can see that. This is the 15th right here. It was coming off a slight pullback. So I was in congruency that this stock, it can burst because it's getting close to this, but I didn't know how long this rally was going to last. So I wanted to get in as soon as possible. I didn't know if the IWM was going to go past and break out and then pull back the same day. I didn't know that. I wanted to take advantage as soon as possible, grab some shares, use buying power and to my advantage, using more money to invest or to trade the stock, and take a small percentage and get out because I seen this resistance. We talked about this resistance. We did. And here we are, NOG, where I took advantage of that. It was similar to the overall market. I did bought it. This is the first pullback. So I did do my strategy. I bought the first pullback. I don't like buying the breakouts. I bought the first pullback and it rallied up next 3 days. It performed. It did exactly what I thought it was going to do. It did exactly what I thought. Got out. That was it. Many people or many traders, they make a mistake in getting into a stock and staying in it when they know they're not supposed to be in it no more. And that's the biggest mistake that most traders make. You can't make that mistake and think that the stock is going to go up forever. You just can't do it. So take advantage of that moment or that momentum and that volume spike. Get in, get out, set your goal. Sometimes you can measure your goal too high, but I stayed well within the previous resistance point right here. And I like to sell before this point. Why, Ronnie? It seems like such a short game. It's because I'm using buying power to my advantage. A lot of y'all don't have buying power like that, so you don't see the advantage that I'm taking. Now, if this was a different pattern, this is my setup. And you got to understand that this is my setup. My strategy is ideal for people that, have a buying power, a minimum of $5,000, between $5,000 to 25,000, because that's how I trade. That's exactly what I do. So I use that buying power. To my advantage. Now, if you don't have this, then yeah, you can trade like that, but your gains won't be as big. They just won't. And that's just what it is. And that's okay because you can use leverage. I'm not saying use leverage from your broker, but you can use leverage from, a bank. Like I did when I first started. You can go get a loan for $5,000 and use leverage and pay the bank back in small little change monthly, but practice and grow that money in the stock market. And you are taking a risk, but you are having double protection right there, because if you lose the money, you just pay back the bank in small increments. Noted that, yeah, you do have to have another stream of income to supplement that, but also that you weren't using your hard-earned money that you really can't get back if you lose it all in the stock market. You can do that. So use buying power, use leverage. That's what I do. I use leverage. Now, I don't use leverage anymore because guess what? I've already multiplied my money from that loan. So it's all my real money going back into it. If I wanted to continue to use leverage, I could. But starting out, yes, for the newbies, for those with not big accounts, I'm talking to you. You don't have a portfolio of at least $5,000, then yeah, it's going to be hard for you. You got $3,000, you might get it up to $5,000 in a month or two. But you got to use leverage. If you use leverage, you can use buying power to your effect, because you can get in at 250, like me. You can get in at 250 and sell it at 279. And what is that? That is 10%. Yep, 10%, 11%, 11% win. You can do that. You can take that 10%, because if you using, let's just say you're using $15,000. You got $15,000 from the bank, and this is your idea. You've better tested this. You see that it works 60% of the time, and you say, I'm going to bet on this. It has all my variables. My winning chances are high. And you say, I want to use $15,000. Use $15,000, and you take a 10% win to your account. That's $1,500 within 3 or 4 days. You see? So you can use that. Now, if let's just say the overall market, IWM, was continuing to go on a downtrend, would I bet big on that? Hell no, I wouldn't. I would use small increments. I would use a small trade, probably, 4 grand, 3 grand on a single trade, and see if I can get, extra 500, 800 bucks. Now, if all the variables were there, which in this case, it was all variables was there, use a big, use a large lump sum of my account and bet it big on the stock. Yes, it doesn't, when you bet big on stocks, it doesn't have to go up that much for you to get a gain. You can take 5%. You can take 5%, basically trades. You can sell at 5%. You can sell. It doesn't have to go up that much for you to make money. If you're using 20 grand, 25 grand, if you got that to leverage, you got that to lose. But most people don't. I understand that. That's why I preach use leverage. That's how you come up. That's how the rich do it. If you don't understand the rich, you need to go study the rich. That's how they do it. They use leverage even when they got money, because they don't want to take a risk with their own money. They hard earned money that they can't get back, but you can get back the bank's money. So that's leverage. That is what I do. That was my recap on NOG. Bought the dip. It broke out of the pattern. Any pattern doesn't really make any matter to me. If it breaks out, it's going to pull back eventually. When it pulls back, I find the dip. And yes, I bought on the first green candlestick. It matched everything. I'm okay with that. I'm not going to judge myself over it. So if you see that, yes, use your logic when it comes to placing trades. Don't take everything for verbatim and just say, he said don't do this, don't do that. Use logic. Now, I'm not saying like don't set your stops. That's fundamental. That's just common sense, because that's how you blow up your account. But entries, finding your entries, very key. When you find your entries, use these hourly charts. I have so many right here. Use these hourly charts and you'll find a good entry. You find that entry, just place the trade, set your stop, go on about your business. Ronnie, where'd you set your stop? Bet right under here. Somebody asked me, why do I set my stop over the previous day low? Because usually I'm getting in on the first and second day. From the pullback, any pullback, I'm getting in on the first and second day. My stop is somewhere right here. So if it drops all the way down and goes down, then that means it's going to continue that downtrend. I don't want to be in it. Good, get me out. I lose 500, 800 bucks or 200 or 100. Great, whatever. On to the next. Or maybe I'll use 1,200, Cool. I lost that. Because the next trade, I'm going to make that or then some, or triple that or quadruple that profit. So I set my stops previous day lows because usually the first and second day. If I get in on the second day, my stop is somewhere right here. It's still by the support. Understand that. It's still by the support. This is the support right here. You want to set your stop under here, under the support, slightly under the support, 1 to 3%. Find your range, your comfortable range. And that 3% may not be comfortable for you. 1% may be comfortable for you. Use logic, use common sense to kind of levy that and see where is your nice sweet spot. Now, that was the NOG recap. Right now, I am in PNAT. I'm in PNAT. I am down like, I use I think I use like $1,000 on this, considering that this is like almost a true penny stock. So this stock is very, very volatile, very, very shaky. Yeah. Again, Ronnie, why'd you trade the stock? Well, my setup came, but if you look at the history of the stock, this stock is very stringy. And some of you may say, "Hey, Ronnie, you told me you don't want that stock. You don't want to trade that stock because it was stringy. It was my trade idea. I didn't bash you for the idea. I just said, hey, beware, be cautious. If you take the risk, take the risk. That's how you're gonna make money in this game. Take risks, but always protect yourself. I just tell you my opinion on it and why I wouldn't trade it or why I would trade it. So this stock, yeah, it was stringy in the past, but it got some definition right here. breakout, same idea, breakout, boom, pullback, bought. Now, give and take, yes. Yes, I bought on the second day right here. I didn't catch the first day. I didn't, but I bought on the second day. Okay. And this is where I got in, but it's like fluctuating. So I'm down right now. Am I tripping? No, I'm not tripping. Why am I not tripping? If you look at the volume, I mean, nothing's really scaring me. And like today was a red day, technically a green day, but technically a red day, but it was green. It was a green trending candlestick. And I'm gonna stay in it. Why am I gonna stay in it? I seen some signs right here. It dropped down, but it retracted and it rallied back up right here. It was fluctuating all day. It got back to 8 today. And it was even at 86 today. 86 thousandths of a cent. And I'm gonna keep my shares. And if I see anything that gets around this area, I can go ahead and sell before my stop, or I can just sell whenever it hits my stop. And that's just the idea. I just buy the first pullback. That's what I do every single time. Now, sometimes you may see me trade another pattern, but that's the pattern I trade. Give and take, if I would have bought on the first day somewhere at 60, yes, I would probably be out by now. I'd have probably been out the second day because I'm looking for those 20% gains on this type of stock, because I did bet small, so I'm looking for a higher percentage because I'm using less buying power. Understand? More buying power doesn't take a lot of percentage to profit big. Small buying power is going to take more than that 10%, but your probability of winning on those 10% trades, that 10% sell target, is higher than trying to set your goal for 20% and not getting it. It's just your chances are low that it's going to go 20%. So I like taking those 10%. But when I bet small, I got to take higher percentages. This is a true, it's almost a true penny stock. When it'll be a true penny stock right here at this level. I seen that it was a recent high stock. This thing can go. In one day, this thing went up 442%. So I'm looking to capture some of that. And I am taking a risk. I usually don't trade stocks like this. This is your true nano cap stock. The market cap is 3.6 million. That's terrible. But I take risks, man. I do take risks. That's why I earn the big bucks. And I'm not to throw it in nobody's face, but I take risks. I'm self-sufficient. You guys have to be self-sufficient. If you don't see me looking at it or watching it, bring it to my attention. And like, I'll look at it. Like every time y'all bring a stock, I'll look at it. I look at it and I say, I'll probably trade this stock. Too bad, because I'm already in this stock. Maybe I don't want to take 2 or 3 positions at a time. Just because I don't trade it doesn't mean I don't think it's good. You see other people profit that it be stocks that I've never seen, and they be like, "Hey, I'm trading the stock," and they win because they're not dependent on me to find the stocks to trade. They have been trading, they have been practicing and beta testing, and they get it. They get it. They understand. Like, I gotta find these stocks on my own. I gotta find my own niche. Okay, I gotta find it and trade it and gather that information, gather the data. They tracking their trades. They have an Excel sheet. Some of them have Profitly where they can upload their trades and keep track of their performance. Because if your performance low, then that means you need to check yourself. And if you don't have a performance at all, then you need to get in the game. Get in the game. Like, get into it. Be motivated. You got to be motivated at this, and you got to put in the time. You can't skip the process of putting in the time. I know you want to be where I'm at or where other traders at in the chat room, where they've been trading for a year. I've been trading for 3 or 4 years. Look, I put in my 10,000 hours. You got to. You have to. So you can get to the point where you're profiting big time. And yes, last year was my lowest year, but who doesn't want an extra 42 grand? roughly 42 grand. Who doesn't want an extra that on top of your other incomes? I'll take that any day. Very grateful for last year. Last year taught me a lot. Toughest market that I've ever traded in, and I still profited. I came out green. Now I gotta report to Uncle Sam so he can take a little bit of that. All right, that was my spiel for a good 35 minutes. So guess what? We're finna turn into Q&A. I'm basically going to stop sharing my screen, and I'm going to go into Q&A on, anything, any topic, anything that you want to discuss. I'm going to unmute, and we can go ahead and chat about it. We can talk about it a little bit. Q&A, everything is open. There is no dumb question. So go ahead and ask any questions that you want. I'm going to go ahead and unmute everybody. Kyler, what's up?
What's up?
Hey, good, man. You sound good. You look good. You ate good, too. Hold on. You said what?
Happy plate, bro.
Oh, yeah, that's a happy plate for sure.
Ain't too good to eat off the paper either.
Oh, no. I still eat our papers, yeah.
I feel you, bro. Feels good to be back, man. I was lazy. No other excuse. I was just lazy, bro.
Yeah.
The bad market conditions played a role in that, and I could have spent more of that time studying the market, and I wasn't putting in the work I shouldn't have. So everything that's happened is all my fault. I hold myself accountable, but I am. So, and I'm a man of my word. I found some stocks that I'm going to share my screen and show you what I think about them, and see what your analysis is on them.
All right. Ready.
You see it?
Yeah.
All right, here's my 2019 watch list. Let me find the ones that I was really interested in. Let's see. Invax was one that I was kind of looking at. Got an uptrend. And I drew the line for the uptrend, and then I drew where it most of its resistance was. So trades like these, I'm looking for this. If I zoom in, I'm looking for this stock to get over this yellow line, the SMA, and break past this resistance. And if you look here, where the percentages are at it, if you could see where its first resistance before I drew this line at about 12%, and it hit its high at 258, which had been about 25%. So when a trade like this, you're looking for it to make a new high, but if it doesn't go past where it previously hit when it broke out, then I would look for about 5 to 10%. But that was just one I was looking at. It's not really one that I actually probably would trade, to be honest. But if you look at the RSI, you can see where it possibly could start being bought. Somewhere around here. It's not ready to be traded yet. Let's see. I see NOG, the one that you were trading. You said you was in that one. Can't hear you. I think you're muted.
Yeah, that was the recap.
The recap? Mm-hmm.
Yeah.
See,
I'm out of the trade, but I'm in PNAT right now.
PNAT? I see. Let's see what what made you get into NOG, if you don't mind me asking? Was it somewhere? What time frame were you looking at it on?
I looked at it on when I found it. I was on a 1 year chart.
1 year daily?
Yeah, 1 year daily. I bought on the 15th.
On the 15th?
Yeah, it was a pullback. I bought on the 15th.
I see. Bought the pullback. Oh, okay.
I sold on the 18th at 279. Yep.
Oh, okay. That's nice.
But yeah, got that small movement.
Hey, nothing wrong with that, man. You profited.
Yeah.
Another one I thought was interesting was TXMD. It had a nice little support and resistance going on for a long period of time, and it dropped below its its support and resistance, fell lower than it ever has, hit its all-time low for that time frame, and then it's starting to rally back up. So I think once it breaks this previous support, then there'd be an opportunity to buy it when it breaks out and goes back to its old support, and its next resistance is about 24%. That'd be a nice 10% trade you could take. Because all it would have to go up to is about $6. That was one that I thought was interesting. Another one I was looking at is HMY. Once again, it's got a nice little support and resistance. It's broken out of its support. It's also fell below its resistance, but it's got back into its trend. It started to uptrend a little bit right here, and then it's falling. So once it starts being bought, I could see an opportunity to take, at least 10% because it's got about a 14% before it hits its. Here, I'll draw the line to show what I'm looking at. I see on this line, I see the like a support and resistance channel through here. If you look at the line from up here all the way across distance, so I can see if it decides to uptrend, you can take a 12% there. And then its next resistance, of course, is up at about 30%. That's another one I was looking at, and I think there's a couple others. I traded these stocks on a double bottom pattern. I think it was CVRT. It might be on here. EMPH looks good, but that'd be chasing unless it fell below, the 630 mark. By pullback. Oh, this is the other one. Quadruple U.
Yeah.
Symbol, but it's got a nice little channel, support resistance. So right now it's hitting its support. If it's all the way to its resistance is 35%. So this would be a stock I would look to take 10% profit on, even if it didn't hit all the way up to its resistance.
Yeah.
I look at things like right here where it's hit its support and resistance, like in between the channel.
Yeah.
Right there is another 20%. So that could be a nice trade. I would look to take 10% on. And I think that was all of them. I'll check to see if there's another one.
Man, I like that. The last one, the quadruple U. And I think ENPH was a one I like too. I've traded that before.
Yeah, I've traded. That was the first trade I've ever won on, ever. First.
Yeah. How much did you win on your first trade?
Like 500.
$500 felt good?
Yeah, it felt crazy, man. I won on ENPH my first trade ever, and then my second trade was POTN, and I won another 500. So I made $1,000 in 2 days, first 2 days in the market, and then I went crazy because I thought it was easy.
Yeah. Thought it was easy. What you was gonna show us another stock?
Yeah, I think I have another one. TEUM is doing the same thing that other stock was doing. I was showing you earlier. I mean, it had a nice little support resistance there for a while. Its support, but now it hit its all-time low and it's trending back. I should have bought right here because it had a nice little uptrend, but I didn't. So, but it's approaching where its old support was, and if it breaks out, I could see it hitting, its old resistance, which would be a 30%. And what I've been doing lately is I've been drawing the lines like in between right here.
Yeah.
Where you can see where it's, hit there. It's bounced off right here. It stayed. So if it was to break out, there's a good chance that it'll hit 13% because of the history of what it's been doing lately in this channel. Look at the channel within the channel. So that's another thing I've been looking at.
What are you identifying the trends? Because
I'm looking at the channels, but I haven't seen any really. I looked through every stock that was on my scanners. I haven't been seeing any like patterns. Looking at things like the channels and stuff like that, just to see like what stock has a chance of going back into the channel. So that's like I know it's not making any patterns, but it's kind of like I'm looking at the history of the company and seeing what are the odds of it hitting that. I haven't made any trades like that. That haven't been patterns, but it's also something I've been looking at too, just in case like I can catch some kind of like learn some kind of way to capitalize on those.
Okay. I asked that because um, I see something that, on your analysis, I'm seeing that you are, if you see a pattern, you draw it out a pattern. If you see some type of support or resistance, you're drawing it out. What I don't see is a clear picture of where the stock, what stage it's currently in, if it's uptrending, downtrending, or if it's, sideways. I don't see it clearly. Now, give and take, yeah, you may eyeball it. The reason why I bring that to your attention is because sometimes that when we trade stocks, just using the support and resistance line, and we see that it could break resistance where it was an old support and it could skyrocket. The problem with that is, when you do trade those, I like your idea as far as taking that 10%, because usually those stocks, they will shoot up. Most of them, they'll shoot up maybe 15% and then drop. And I do see a point where sometimes other traders, they'll buy when the breakout happens, but it's already been up 5%. So they aim it for 20 or even 15, but it falls on them, and then it causes them to have to sell and get out, if that makes sense. It causes them to go ahead and sell and get out instead of, waiting for that pullback and buying the dip and maximizing that rally and, taking that 10-15% gain.
Mm-hmm.
I don't want you to get caught up in buying. I don't want you to get caught up in buying stocks that do break out, but they don't break out large, and get caught up in, buying at 5 or 10% of that breakout. And then when you get in, it go up the next day a little bit, and it hasn't reached your goal yet, and you think it's going to reach your goal, and then it falls the next day. But when you look back at it after you traded it, it's been up for 2, 3, 4, 5 days, and you like, how did I miss that? And that's kind of what I'm noticing in your analysis is there's no clear uptrends. I've seen a couple of them where there are clear uptrends, and I like that. It's just some of them are not clear uptrends. Kind of like this one we're looking at now. There, it's not a clear uptrend. It did break out. Sometimes people buy those breakouts and they expecting for it to go 20, 40, 50%, but it has to have a pullback on the breakout. Every breakout has to have a pullback, and I want to just keep you in mind of that. That's it.
And like I said, I don't trade. I haven't been trading any stock that doesn't have a pattern, but these are stocks I've been looking at, and I look at like support and resistance to see like what it can do. So like the line I just drew in this trade,
yep, that was good.
Where where it's supporting at, and then here's another point where it's either resisting or there's days where it's sitting on that resistance and it's just like floating on it. So I would look at it at 52 cents, and I would calculate it to see. So from 52%, if it passes that line, where could it go? And I look and I see, okay, well, let me draw another line. Where there's other days where it hit. So I go to the white line and I go up and see, okay, so there's a chance it can hit 10% off of this breakout right here, because that's where it's dipped and hit and bounced back up at some points.
Yeah.
If it breaks past that, it can go and hit 33%. And like I said, I haven't been trading those because I don't like trading anything outside of pattern, because at least that's something that's been a proven system that works. But I've been going through all of my scanners, like the YMC scanner. I mean the
scanner. All the scanners, yeah.
And I haven't seen any clear defined patterns, so I haven't been trading. But I have been experimenting in things like the support and resistance channel and drawing lines inside within the channel to see if there's any possibility it can hit that if it starts to be bought. So like it's just a little experiment, not something I've been trading, but it's something I could probably over time, once I'm more experienced, take advantage of. And another thing I've been doing is, well, I mean, I've been doing the trail stop thing to where like if the stock shoots up a lot in a day, I'll take um, I'll take the price I want to my stop and my sell order goal, and I'll move them higher to make sure I guarantee to secure some profits. Because there's been so many times where I just leave them where it's at, leave my sell order where I started it at, leave my stop loss where I started it at when I made the trade, just leave it alone and let it do its thing. And I've seen stocks go up, like 8%, 7%, and then drop and hit my stop loss. So instead of me taking that 7 or 8%, I'll lose 100 because it hits my stop loss, So another thing I've been doing with the trail stops is securing money, or trying to secure some kind of money, because it's not always going to hit 10% before it drops. So like, there's been so many times where I could have made, cut $200 or $300, but then it didn't hit my sell goal and it dropped. I've been trying to just for a little profit, because as long as I can make, any kind of money, that's always good. That's going to grow my account. But I'm looking for the big wins, like I've been taught to do, but sometimes it doesn't even hit 10%, and leaving some money on the table, in my opinion.
Well, what's your idea of big wins? Because I want to make it clear to everybody that, take those average wins, like those 10% wins, 15%. Those are your average wins. Those big wins are like anything above 20%. So it depends on how you look at what is a big win, because a big win to somebody with a small account is like 50, 40%, because they just almost doubled their money.
Mm-hmm. The biggest win ever was like 27%.
Yeah. So take those small wins. And when I mean small, I don't mean that it's going to be small for your account. Just take those 10%, 15% wins, mainly 10%, and just cash out. But
and like I said,
yeah, go ahead.
Like I was saying, not all stocks hit the 10%, but there's been times where I've left a few $100s on the table, and that's the decent win. A couple $100 is going to grow my account. It's not as fast as it would if I would have took the whole 10%, but sometimes they don't get all the way up to 10%. So I would rather secure some guaranteed profit rather than leaving it alone at 7% and watching it drop and hit my stop loss. So like, my goal is always 10% minimum, like I've been taught, but sometimes it just doesn't pan out like that. And I think a part of that has to do with the market conditions that we've been in for a while, but stuff like that happens.
Yeah. And your first year going in was obviously one of the toughest years. So I feel like you got a lot of healed wounds that have made you stronger. And now you have a visual and a great idea of what to expect going forward. So
yeah, plus like a few things have happened, like medical bills and things like that. So I've actually been pulling a little bit. I haven't been trading as much because like I was losing. That was one reason why, but another reason was I was taking a little bit of money out of my account to cover other emergencies, because I took my own personal money and they're tied up in other investments outside of the stock market. It's just been betting on me getting this job as blackjack dealer for a long time. So like I was kind of early and jumped the gun thinking that I had the job in the bag long time ago, 6 months ago or longer. And I was already went ahead and made some other investments that I should have waited on when I had, I should have waited until I had the job in the bag before I made the other investments, but I was getting impatient. Yeah. But it was got to learn from your mistakes, and I think I did make some wise investments. I mean, I'm outside of the money that I got from your dad's enterprises, from the lines of credit. I invested those, and then I took some of my own personal money and invested that as well. So
yeah.
People might call it a mistake or impatience, which it was impatient, but I mean, I just went with my gut, and it's never failed me yet. So tax season's coming up. We have some great vehicles on the lot. I think those are going to sell. The money I make from the car business is what I'm going to rebuild my stock trading account with.
Yep.
So it was all part of the plan. That's why I did it.
Yeah,
Go
that's
ahead.
good. Yeah, that's good. That's good. And um, like you don't have a problem taking risk. Um, pay attention going forward with stock trading. Pay attention to where you buying. And you want to make sure that you are buying a dip or something close by support, and that's gonna to basically spring you off to get those 10% wins or 15% wins. That's actually going to maximize your account. Something that can also help you if the market conditions are good and you buy a trend line support. You can buy, set your stop, but sometimes I don't I don't even set a sell goal order. If the market conditions are good, the volume is high on this stock, the volume has been increasing, it's very unusual. The volume is above average. I bought the support. This is a trendy stock, meaning it has a clear definition trend or pattern. And let it run up, and pay close attention to resistance, because you never know, the stock can run up 50% and you can grab 40 of that. So sometimes you can buy, set your stop, don't set a sell goal order, just let it run up. But I only do that when the market condition is good, the volume is there, all my variables are there. So then you can say, hey, I can move my stop order to what my original goal would be, which is 10%, and then let it run up. And then if it does drop down, at least you can take 10% off the books.
Yeah,
Yeah.
and like from from probably 9 September 4th all the way until December 26th. That's like 90 days that just there wasn't that many great opportunities out there. I mean, there were some trades I tried to catch.
Yeah.
Some I won, some I lost on, but for the past 90, over 90, probably 100 something days, I really wasn't making any trades because of the market conditions. And then even if you look back to, I started trading in February, which was like right after right after this big drop here. I started trading somewhere in here, and oh, you can't even see that. Hold on, you get the idea. I started trading in February.
Yeah. Yeah. I got you.
Like soon after getting into the market, here's March right here, and then the rest of March had that big drop. The market kind of corrected itself. I was still learning in this, in during this time. The market had this little bull run, started to level off and started to drop. So by the time thought I was getting decent at trading, we ran into that big, just like 100-day hellhole of when the market just started crashing. We were damn near in a recession. If the market just kept dropping and staying red, we would have, by definition, been in a recession. So
Yeah. Yeah.
trade. So that with me having to go through all that in my first year trading, and I still didn't fold. I mean, I feel like that taught me a lot, and I'm glad it happened because like if the market's going to be decent or good, like normally been for the past few years, then I think I'll be fine. And with everything falling into place, like tax season coming up for the car business and me getting a job as a dealer, I'm gonna be all right. I promise. Like I wasn't gonna fold because I understand like how big this opportunity is to be able to take 10% gains in anything,
Yeah.
especially in the stock market. So I had a plan, but you know how plans go, man. Sometimes they don't go just straight line. There's snags in the road. So, but now I think everything's about to come, man.
Yeah. And
A little bit later than I anticipated.
granted that you going through your first year with a tough market, you won't feed into the idea that you're actually the greatest trader alive, because most traders think that beginner traders think that if the market is really good and they're trading and they're winning all the time and they like, I'm the greatest. But when they get in the bear market, they don't know what the hell to do, and they get this false idea that they're good when actually they're not good. So, like I said, those wounds that you endured, that's what made you good. And now like, look, if when you come out this year and do well, you like, I know I did well. I've been through a tough market and I did all right. But you didn't have that false reality of the market is great and you just making trades as a newbie and you're winning, and you had never been through a tough market. And so you think that you're just the greatest trader ever alive living, and you get in a tough market and you shit your pants. So
Yeah.
I'm glad you went through that, because it just helped you out, and now you don't have a false reality. Now you have a realistic, practical reality of trading, and you understand how it works. I think it's going to be a breakout year for you, because I think you understand what it takes, the hours it takes putting in, the focus, the determination, the motivation to keep going. I think understand what it takes now, and I think if you understand that, if you truly do, and you do put in the work this year like you set out to do, you're gonna be good. You're gonna
Yeah, because
profit. I'm not saying you're gonna make $200,000 or anything like that, but I will say that you will profit.
and see, like, one thing I realize now that I feel like I've matured a lot. Like, I've matured. I went in with, I believe in myself more than anybody. So I was thinking, like, when I first started out, like, this wasn't gonna be that hard if I put the work in. But even when I was putting the work in, I wasn't, profiting like I thought I would, and that's just how life goes, man. Not everything goes as planned. Even if like, but like, my point here was, like, when I first started trading, I was immature, So I've matured a lot, and I understand that, like, patience is very important. I was impatient, I was making trades I shouldn't have, and
Yeah.
when I first started out, I wasn't trading patterns. After I had those first 2 wins, I started just throwing that out the window and just trying to make as much money as I could. And um, I learned a lot of patience. And after going through that long 100-day plus market to where, like, no trade was very safe from a standpoint, that taught me patience for sure. So I'll be a lot more patient now. I won't be dropping into, like, 2 trades a day like I was in the beginning, getting my account flagged and shit, like having to take my account off of margin because I was trading too much. Like, I matured a lot, and I learned a lot from all my mistakes. A lot of mistakes, all of them. So
That's good.
if I knew what I know now back in February when I first started trading, I could have really ran up my account, really, because there were
Yeah.
some nice patterns that were out there that I was scared to trade because I was a newbie. But
Yeah.
I know what to expect from a standpoint. So I think it'll be a good year if the market comes back to its recent channel that it used to be in. I think I'll be fine, man. And like I said, I love, like, people. Some people like drinking. Some people like, chasing hoes or whatever. Like, some people, everybody has different hobbies, things that they like to do that they think are fun. What I think is fun is investments. So
Yeah.
this is my hobby. I like doing this, even though I got my ass kicked the first year. I think this is still fun, and like I said, some people spend their extra money on other things like drinking, whatever, cars, bullshit for their cars and stuff. I'm gonna take every piece of, excess income that I'm outside of paying bills, and I'm gonna put it into my trading account. So, because I think investments are fun. Some people spend $100 a month on clothes after they pay all their bills. I'm gonna spend $100 a month on stocks.
Yeah.
So my account's gonna be fine. Like, because if everything, knock on wood, because I know how this shit goes, but if everything goes as planned this year, I can at least put an extra 20 or 30 grand in my trading account and run that up.
Yeah.
I can multiply 30 grand by 10. That's 300,000.
Yeah. Those goals, I love them. I love them. Now you know what it takes to reach those goals. It takes excruciating work, dedication, hours, hours, hours. And I just preach that. And now you can preach that, like, hey, I want to be good at this. Like, it takes hours. It takes dedication, motivation. You're going to take losses. You're going to make mistakes. You just got to keep going. And that's just what it takes. It just takes hard work and smart work at that, because a lot of people, they do put in their time, but they don't exercise what they do have, like asking
Mhm.
questions and understanding how to fix their mistakes, you know. And I think that comes with just maturity. Like you said, you matured this year. And I think for to speak on everybody else, that is watching this video, it does come with maturity, but it comes with that maturity comes from experience. And once you experience that that grit, that understanding of it takes grit, it takes hard work, it takes strong mentality to keep being successful at investing in anything. So that's really good. Man, thank you for your insight on your journey for your first year in trading, and well, coming up on your first year, right?
Yeah,
Started at
after February will be my first year, so we're getting
yeah,
close.
getting close. So end of the first month of the year, you've already made some profits, so that is good. This year, I think it's going to be really great for you because, like I said, I think you understand it and you get it now, and I think that goes for everybody else who really wants it. Hard work, dedication, determination, hours, 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 hours on the charts, looking at these charts, looking at the stocks. Even me, I can't take any breaks because then I'll lose my skill, my ability. So it's a continuous journey. And I guess from people that's listening tonight, hearing from you and me, you have to realize this is what it takes. It does take hard work. It does take hours. It is not easy, and you got to understand that just like the mindset of a gladiator, you may train, but you may get in that ring and lose. But you got to scrape up your equipment, scrape up your tools, your mind, and you got to, put some rubbing oil on the wounds and keep going and keep going and keep going, keep getting better, keep asking questions. That's why we have the group, so we can ask questions, so we can keep growing together and we can keep each other motivated. Because if you're doing it by yourself, yeah, it can be very tough and people check out like that. So if you're still in the game after a tough year, then kudos to you because it just takes a lot of grit. And though the reason why you're gonna make it and you're going to basically be successful at this is because you won't quit. That's that's it. You won't quit.
I can't, man. If somebody's done it before, and I know I can do it, so I can't. I mean, even if it took me 3 years to have my first 100K year, it'd still be worth it. Where else could I make 100K in a year on the side?
Yeah, yeah. And
Nowhere. And I want to apologize. I forgot. We cousins, bro. I forgot we was even on the Wednesday
no,
webinar. I'm sitting here,
no,
you know,
this is good because this is real. It's very, 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 very real, and people need to see this. They need to see the reality of the behind the scenes. This is all the behind the scenes talk, all the behind the scenes strategy and thought process into it. Like,
yeah, because people,
yeah,
I was gonna say, people look at some of the traders on Instagram, some of the successful people on Instagram. Those people are only snapping pictures and videos of their highlights, the highlights of their life. They don't snap pictures of the downtimes and the struggles because nobody wants to see that. Nobody. I mean,
nope.
some people do.
It's a big turnoff. It's not sexy. It's not sexy when you take losses.
Yeah,
And people don't want to see it, but we post them anyway. Like, hey, I took a loss right here, took a loss right there, just showing the reality that it's not always good. But
yeah.
in overall, it does be good. It's just in between where people don't see there is hardships, and you got to endure the hardships. You have to. So, yeah,
People just want to show. People want to project themselves as perfect, but they don't show the imperfections. So,
nope.
important to
And
be
that's what separates
fair.
the real from the fake. Yep. But I think we've only ran 10 minutes over, so we're good. I like to
Okay.
keep these within an hour to keep people's attention span. You know how people are.
Yeah.
Y'all who are watching, rewatch this video. Listen to what Collar's saying. His outlook on his trading career so far. It takes hard work. It takes time. It's not something that you can just do overnight and it's going to be good. So I appreciate your insight, Collar. We're going to end it right here. Um, I'm gonna post this. I'm actually gonna post this in the library, but I'm gonna post this actually in the chat timeline because I think everyone needs to see this video, and especially hearing your experience from you. understanding your first year, your struggles and everything. I think it's going to be very good for people, very therapeutic.
And can I say one more thing that'll take
Go
20
ahead.
seconds? I'm done. I'm a numbers guy, so if you really think about it, you shouldn't quit because, like, if you started off with 5 grand and you doubled your 5 grand, every year, you'd be a millionaire in 6 years based on the numbers. Because, like, 5 grand, if you double that in a year, you might think it'd be 10 grand, but it's actually 13. And then you take 13 grand and you double it, because I'm looking at it from compounding it, you know.
Yeah. Yeah.
So when you compound it, that compound is going to take it over a perfect, 10 grand from a double. And it'll actually be 13 grand after a full year. Third year, it'll be somewhere around like 30 something. After 6 years, you'd have $1.3 million. You double your account every year based on compounding, not just based off of like just a pure double. Like, because when you're compounding your money, like if you actually look at it from an average, because you'll have your 25% trades, you'll have your 10% trades, and you factor those in to get an average. Say you average about 15, 16%. That's where I got the 5 grand to 13, then the 13 to 33, and then the 33. It'll end up being $1.3 million after 6 years.
6 years.
If you don't touch it, you can't touch it, though.
You can't. Numbers don't lie.
I'm a numbers guy, so. I'll have to one of these days show you guys, because I had an app that I did the calculations on. That's why I won't quit. Why would I throw away 1.3 million in 6 years?
Yeah. When you have the vehicle, the tool to get to that point, why would you quit that just because it gets a little hard?
Yeah.
Yeah.
Ronnie took 5 grand and turned it into a lot more than just a double. He multiplied his money by 20.
Yeah.
So you don't want to know the numbers behind that, but if you just double your account, that's 1.3 million in 6 years. That's
6 years.
That's only 200 something percent in a year.
Yeah.
So
very possible.
But I'm done talking.
All right, bro. Thanks for the insight. I am going to post. Hey, Kyler, you are doing taxes this year, right?
Yes.
Yes, please. So, if you can, I'm going to post this video in the timeline, but I'm also going to post. Well, no, I want you to post your tax opportunity, what you can do for people. It can be quick and brief on the timeline. Everybody's going to get the alert to their phone. If you can do that, then it'll be great, because everybody will get it to their phone and they'll see that, hey, I can do my taxes with Kyler. He's in the group. Okay. Somebody I know, somebody I see. So
I was just going to say, I'm not trying to make money off of it. I don't want anybody's money. I'm not trying to do anybody's taxes for them. All I simply want to do is just give people suggestions on how to maximize their returns. That's all I want to do.
Oh, got you. All right. We're going to cut it right there. I appreciate you, cousin. See you later. Love you.
Bro, peace. Love you too. Let me call you real fast. It'll only take a little bit.
All right.